Hey, welcome back to Pave the Way podcast. I'm your host, Greg Helbeck. Today I am here with Scott Bauer, who is a very successful investor out of the Phoenix, Arizona market, a market that is hyper competitive. And Scott's doing big things in Arizona. He's got a very cool story, and I like Scott. And I met him at a conference out in San Diego, and I think he got up early and he was like running really early in the morning, and he's into like kind of doing crazy stuff and fitness. So I really vibe with that. So we kicked it off and became good friends ever since then. So and actually, Scott was the one who told me one night in Coronado to start a podcast. So because of Scott, you're listening to this podcast now. So Scott, thanks so much for telling me to start a podcast. And now look at you, you're a guest on my show.
Yeah, man. No, I appreciate you inviting me here today. And at the end of the day, man, it's all you. You decided to take action. It was you that got up there and figured out, even though I gave you the advice to do it, you took action. So congratulations to you for that.
Oh, well, thanks, man. I appreciate it. It's good to have you on as a guest. You know, we're talking about the idea in Coronado, and now it's reality. So, Scott, I mean, I think we've had a couple conversations. I never really got into like your deep backstory or anything. So, I mean, for me, it's going to be very interesting for me. So kind of, would you mind telling me about because you're a younger dude, kind of like me. So what's your background? Like, what did you do to get to where you're at today? And kind of tell everyone, once you're done with your background, where you're at today and what your business looks like.
Yeah, definitely. So I'm from Iowa, state of Iowa. Now live in Phoenix, Arizona, but born and raised in Iowa. I've always been a hard worker. My family comes from the farm. My whole family's farmers or comes from the farm. We didn't have a farm myself, but I lived in an area that's just surrounded by farming. Hard work has always been part of my lifeblood. And when I was just a junior in high school, I actually started my first entrepreneurial business, and it was a car detailing company out of Des Moines, Iowa. It was phenomenal. I mean, I was in high school making thousands of dollars during the summertime. It was great. Kind of gave me a taste of what business looked like. And then one of my clients actually was the president for the third largest third-party logistics company in the nation at the time, called Jacobson Companies. And they were based out of Des Moines, Iowa. And he had 7 vehicles that I would detail for him on a weekly basis. And him and I got to know each other really, really well. And when I went to college, he said, why don't you come intern with me at Jacobson Companies during the summer? I'll teach you all the different parts of what third-party logistics is, which for everybody out there that doesn't know what that is, it's end-to-end supply chain management, right? So if you're a company and you have a product, you need to manufacture the product, you need to store the product, you need to ship the product, and you need people to run that whole operation. So that's what it is. So I did just that. When I went to college, I interned with him during the summertime and learned all the pieces of the business. And then when I graduated from college, I could go anywhere in the country and decided to come here to Phoenix. And did that for about a year, working for another company for about a year here in Phoenix, just to get my feet on the ground. And I can't do that, especially being as close I was to the top of the food chain of that company. It was a 7,500 person company. There were 7,500 employees there.
God.
And I knew the top dog. So anytime I had a problem, I didn't go to my manager. I didn't go to the direct report. I just called Mark. And in corporate America, you can't do that. So long story short, that lasted about a year. And I was dating a girl at the time who was in property management. And I was complaining about my job and just didn't like the structure, whatever. And she said, why don't you go to real estate school? You're already in sales. It'd be the similar type thing. So that's what I did. Went to school at nighttime and got my real estate license while still working the other job. Tried to do both for a couple of months, realized I couldn't do that. So I burned the boats, quit my job, cashed in 401k that I had. It was very small, and dove 2 feet in real estate.
Wow. Okay. I didn't know that about you, man. So you went to college, you got the corporate, but how old are you, man? You're a younger guy.
I'm 30 now, so I'm 30. Yeah.
Oh, yeah. You're just turned 30, man. So okay. So you're still a younger guy. So what was this, like 8 years ago now?
So this is 5. Let's see. So 2013 actually is when I quit my job and dove 2 feet in to real estate. So, it the first 6 months of it is just trying to figure out what even real
Oh,
estate is, right? You have no clue what's going on.
oh yeah, it's terrible. Well,
Yeah.
it's good looking back on it now, but at the time, it's not very fun. You're like, oh my god, and you compare yourself to everyone. It's a whole nightmare. So
Yeah.
you quit your job. That's very entrepreneurial to say the least. You know, a lot of people do that, and they're like, oh, they want to kind of stay in the comfort zone. You're like, forget about it. So you got your real estate license. So did you broker so kind of take me up to when you quit your job now to
Yep.
where you're at today, and then we'll transition into some of the other content on the show.
Definitely. So yeah, got my real estate license. Was an agent for a year. Did 2.2 million in sales my first 12 months, which was 6 transactions, and it was door knocking. I worked with Keller Williams Realty, and there was another guy in the office that was door knocking. I knew how to door knock. I knew I could do that, so that's what I did. I just picked a neighborhood and door knocked, and I got 6 deals, and they amounted to 2.2 million in revenue, or not revenue, in product, gross product. The
Like
price of
sales
the home,
volume.
right?
Yeah.
No money, and I mean, Keller Williams was just excited. They were hooting and hollering. I think I made like a top producer one month, and I was looking at my bank account like, wait a minute. What, like, am I missing something? Do you have my money? Like, where, like,
Who's got my money?
right. I don't know what's going on. So did that worked as an agent for about a year before learning that there's other ways you could invest in real estate. By joining the local RIA here in Phoenix. And I just actually saw Dave Lindahl. For those of you out there that don't know who that is, he's a multifamily mogul. Get up on stage and talk about how amazing apartments were, and I was instantly sold. Instantly. So I borrowed $11,000 from my mom to get into Dave's coaching program, and that was really the start of the empire and building.
Dude, that's amazing, man. That's amazing. So so let's pause back to the brokerage thing. So so a lot of people listening to my show, they're probably more investors than agents. So what were you getting, like 5% of the sales? So you basically take the gross revenue of the sales volume, then you multiply that times 5%, and then you got to give your broker money, and then you got taxes. It's like you'll be starving.
Well, the way that it worked with Keller Williams Realty is, so typically here in Arizona, it's a 6% commission for agents, 3% to a buyer's agent, 3% to a seller's agent. And out of that, I had to pay 6% royalty fee to Keller Williams. I had to pay them, let's see, it was a 70-30 split, 70% to me, 30% to KW, until I reached $21,000 I'd pay them in a year, and then I would have 100%. But for the first, I was just, I wasn't making any money.
Yeah. A lot of work, not a lot of money. Yeah, that's not fun. Yeah. I'm a big, holy cow. Okay. So then you realize, the grass is clearly greener on the real estate side. So, we're going to really deep dive into some apartment stuff you got going on today, but let's talk about what is your buy, I call it the buy and sell business look like today. Cause you're in Phoenix. It's not in the market. There's a lot of guys doing deals, but it's not, like I said, the easiest place to do it because there's a lot of competition. So what are you kind of doing on a buy and sell basis? And then we'll get into some apartment stuff.
Okay, so I'm no longer an agent. I haven't been an agent for 5 years or something like that. My primary business is wholesaling houses here in Phoenix. We do between 6 and 10 deals every month and have consistently for a long time. Obviously, we'll have a down month, or we'll have a superstar month, or we'll have a month like this month where we got 11 deals and buyers don't perform, and that's just another subject. But anyways, that's the primary business, is wholesaling houses. And the reason I've been able to get so good at it is focusing on, one, the process, and focusing on the follow-up, because those two pieces together are a very dangerous combination, because 99% of everybody else out there does not do that.
That is so true. So we'll get into the follow. So when you say the process, like, what do you mean by the process? Give us like some examples of that.
So actually where we met at, John Martinez, right, talks about the process. This is a sales process. Without a process, you have no outcome. You can't see what's going to happen, right? So focusing on the process for how all of this works and understanding how people operate, because even though we're in the investment space, I'm buying distressed houses, we're still dealing with people. People is what it is. So you need to understand how to talk to people, how to communicate with them, and ultimately how to kind of read their mind. Because when you figure out the process and you figure out that we're all emotional creatures, then you can really, really hone in on that. And how can I make people feel warm and fuzzy inside and still get what I want, right?
Absolutely. No, that's so critical. I think people think like, yeah, you have to know some numbers. You got to know what a property's worth, how to make an offer. But really at the end of the day, like human psychology and any text you read, it's going to say this. People make decisions emotionally. Everything that we do is emotional. Me starting a podcast, you going to the gym, everything is emotional, right? But we just justify it with logic. That's how human beings make decisions. So if that's the case, then when you got to sell someone on selling their property to an investor, you got to understand how to tap into their emotions, or else you're not going to have a productive sales call. I'm sure you've seen that with your team.
Oh yeah. Yep. The other thing too is, in this very, very, and I mean, it's a joke how competitive it is here. I mean, it's stupid, but it doesn't matter because one, you got to have an abundance mentality, which I have. And two, you just got to understand how the process works. Now, the other piece that I was telling you about is the follow-up. The money is made in the follow-up on everything.
Couldn't agree more.
So if you don't have a system in place where you are dripping on people that are in your system, or one, you need to have a system. You need to have a CRM that tracks everything that you do and has a follow-up sequence that's attached to that so that you can have, measurable outcomes based on what your system is telling you to do, right?
Absolutely.
You have to have that. Otherwise, and once again, most people don't. Most people just say, if somebody calls in on a lead and they don't want to sell today, that it wasn't a deal. It's like, whoa, no.
Yeah, no. That works. Yeah, and it's so funny you're saying that now, because I was listening to a podcast a couple days ago, and the guy was talking about, it was Todd Toback, actually.
Yep.
In Diego. And he's like, people are screwing up how they track the direct mail because they look at it like on a 1 month basis. I sent the postcards out. No one wanted to do a deal with me. But if you track, like most of my good deals, like you said, are coming from the follow-up. If you look at the return on your direct mail ad spend over a 6 to 12 month period, and you can link, like I track every campaign that goes out, it's all the money is on the back end, and there's no competition really on the back end because like they have already built that trust and credibility with you. They're talking to you every month, and like it's amazing how so many new investors. I think the big issue, Scott, is that people kind of get in here with the wrong expectations, and they perceive it to be different than it actually is, and it causes a lot of just kind of friction. Like they don't understand how it actually works. So I mean, you saying follow up is key is just so critical. So what do you have a certain marketing method that you know is tried and true for your business? Because there's a million ones out there right now. What's something that's working for you right now? And then I want to get an example on you using your follow-up process to convert a successful deal that probably wouldn't have gotten converted by another investor. And then we'll go into the apartments.
Yeah, absolutely. So for me, direct mail is tried and true. It works. I don't care what anybody says about it. I'm proof that it does.
Yeah,
people like to feel it. They like to see it. They like to touch it. We get 1 million emails a day, and it's the cheapest and easiest way to send any sort of marketing. So who's going to put any value on that, right? When somebody gets a letter in the mail, they take the time to get it out of their mailbox, open it up, read the whole thing, pick up the phone, and then call you. I mean, come on. They got motivation, right? So that's my tried and true thing. It's worked for quite a while, continues to work, and I think it will for the foreseeable future as well.
Absolutely. So with your direct mail, are you more of a letter guy or a postcard guy? And what are you seeing in terms of like some KP? This is like a selfish question. You're like, what are you seeing on like, first of all, a cost per deal? So we'll get into the marketing piece. What are you seeing on a cost per deal basis in Phoenix? And then on like on a leads to contracts ratio, and then we'll get into some follow-up stuff.
Yeah. So cost. So let's start from the kind of the beginning.
The marketing piece.
I've been just very, very fortunate. It's about 18 leads to contract for me.
Oh my God, that's amazing.
It's amazing.
Close.
Because of the follow-up.
Yeah. Okay.
There are months when it will go down. I've had it as low as 12. Every 12 leads to a contract. And really, I'm not trying to just put out contracts. These are closings. I mean, my fallout ratio is very, very small. Probably 95 or better percent I'm going to close everything. Because, you just got to have good negotiation and you got to have good buyers. Now, that doesn't always happen. I have one right now that I'm having trouble with, but it happens, right? So that's the lead to contract. We have about an $1,800 cost per deal. It's very low.
That's really good. Oh my
But
God.
that goes into, dude, you just take your cost per lead, multiply it by your, I don't know, I'm sorry, what is it? Cost per lead, multiply it by the appointments that you go on. That's not right either. Anyways, those are the two metrics that are important.
That's really good. Yeah.
Yeah.
Those are sick numbers. Okay.
Yeah.
And so it seems to, and are you using more postcard? I'm a postcard guy. Like I've been doing, I just did a letter campaign. It's been okay, Reese, but and there's no right or wrong answer, but I've always been a big believer in let me just send out more units. Hopefully I get more calls and then we convert. So what are you doing, postcards or letters? Because my market isn't as competitive as yours too. So Phoenix, it might be completely different. For me in New York, postcards for some reason are converting well for us right now.
So everything is a professional letter. It's a letter.
Okay.
Yep. It's a professional letter. I think that my company's HBSB Holdings, not We Buy Houses, not Joe Blow, Home Buyer, LLC, none of that stuff. So I wanted to come off as a very professional company when I started it that way. HBSB stands for Homes by Scott Bauer, which was back when I was an agent. That's what my brand was at the time.
Yeah.
And it just morphed into HBSB Holdings. But it's something different than what most people see, right? So I think that that's one big characteristic that makes me stand out. Two, I have my picture flat out on the letter, and it's me. That's who they're talking to. When they call in, they're talking to me. When I go on the appointment, it's me that shows up. The whole time through the process, it's me that they're talking to. Now, from a sustainability standpoint, that's not sustainable, and I'm in the process right now of kind of making some tweaks to change that. But I think that has really been a benefit for me.
I bet you that is a benefit. And also when you say, you're talking about your leads to contract ratio, which is really good in Phoenix, you're probably getting some pretty good leads coming in. They know who they're talking to. They're getting a professional letter. You're targeting the right people. So you're probably getting, this is an assumption, you're probably getting more of a receptive lead on something like that, opposed to like people sending out those third notice postcards and you getting a huge response rate. But people are telling you they're, F off, unbelievable. And then people are like, oh yeah, it's good response rate. But like, how many did you convert, right? Like, because everyone talks about these high level numbers and then their conversions are shit. And they're like, oh, well, the response rate was good. So it sounds to me like you're really getting good quality leads coming in by being really transparent with your marketing methods. So that's awesome, man. It's cool to see you doing it in Phoenix. So as we transition now, I'm sure people just got a bunch of nuggets there. This business, I talk about this a lot with a lot of different people. Wholesaling is a great business. I love it. The whole excitement of buying and selling, the whole roller coaster. But really, at the end of the day, we're in real estate to build long-term wealth, or at least most of us are. So I know you're very familiar with the apartment game. So I want to just kind of touch on, what you're doing to acquire apartments and just kind of what your overall long-term play is with the apartment game. And maybe we can cover just kind of some basic apartment things like buying value add opposed to buying properties that are already stabilized. And I just kind of give a little high-level overview for people, on really what most people get in the business for is the long-term wealth. And I think apartments are a great vehicle to do that. So what's kind of your experience so far with the apartments? Because we were talking about this actually in Coronado.
Yep. So right now, I'm a limited partner in 120 units in Lexington, Kentucky. And I found that deal based on a person that was on my podcast, the Invest This podcast. And really, the time that I've been able to spend in the apartment game is pretty minimal at this point, just because I've been so focused in the single family world. I know exactly what to do. I have a coach that's very successful in it. I know a lot of people that are really doing very, very well in it. And eventually, in the near future, between 2 and 5 years from now, I'll put a lot more focus on that. But just to kind of touch on what to look out for apartments. Yeah. Apartments are they're good because they're a bit recession resistant. They're not recession proof. But, when people, the market falls out, whatever, people start losing their job, they lose their house, they still need to go to an apartment. Now, people that are charging high rents for their apartments, those people are also going to leave because no longer can you afford it. So what do you do to mitigate that? Well, you're looking for B and C class properties that are stabilized today. So when I say stabilized, I mean that they have tenants that are paying, it's got an 85% economic occupancy or better, which means at least 85% of their tenants are paying on time and paying correct. And it has a value add component to it, which means that, let's say, everybody's paying on time. It's a C-class unit. It's in an up-and-coming B or even A- area. And, maybe an owner has owned this thing for, I don't know, 20 years, 30 years, whatever it is. And they've been good tenants. People are paying on time, whatever. But the units are old, right? And so you're charging them $800 a month for a 2-bedroom when, if you go in there and renovate the units, you could charge them $1,200 a month. That's a great value add, because in multifamily and commercial properties, the value is created based on the net operating income that property produces. So if you have a 100-unit apartment complex and everybody's paying $500 a month, and then you got $50,000, was that right? Yeah, $50,000 in monthly income, right? But if you raise the rent $200, you just multiplied 200 times 100 for 100 units. You just multiply the value up. Just your value up a lot, right? So this is what we called forced appreciation. That's what that's called. It's a great way to build massive wealth very, very quickly in apartments, and you can do it using none of your own money in a syndication style model. Now, I don't know if, that's a whole another rabbit hole we could go down. But it's a real thing, and it works.
Absolutely. No, absolutely. And you mentioned before we went into the whole kind of value add component, you're a limited partner in a multifamily deal. So you're clearly involved in this stuff. So when you say limited partner, I know what that means, but to the other listeners, this is where multifamily is very, very appealing to a lot of people, because you don't have to be the one doing all the work right away. You can get in the deal, be literally financially in these deals as a partner, but you don't have to worry about the day-to-day right away. You can let your business run. And then as you get, the business more, automated, then you can actually start to be the general partner. So what is it? I know what it is, but what is a limited partner, Scott? How does a limited partner maybe benefit from these types of deals?
Definitely. And actually right now we have 3 other deals in the Lexington market that we've got accepted offers on, going through due diligence on. I'm not the direct syndicator on it, but I've been exposed to it. And so it looks like we're going to be raising some capital for that. But anyways, what a limited partner means is you're giving up your money for a return. So if you go to a stock market and let's say you go buy stocks for, you put $50,000 or $100,000 in the stock market, there's a very good chance that the stock market goes up and up and up, and then it completely drops out. And you have no control over that, right? It's the economy. It's what happens in the economy. It's what happens with that business that you're investing in. But you don't really have any direct control over it. With a limited partnership, it's kind of the same thing. Let's say you give me $100,000 of your money. I'm going to tell you that, like in this 120-unit deal that I'm in, it's an 8% preferred return back to the investor, and then a 70-30 split for anything above that, up into, I think it's a 14% internal rate of return. But what that means is that the first 8% of profit that property generates goes right back to the limited partners. Now, for every dollar above that, it's split 70-30. 70% of it would go to the limited partner, 30% of it would go to the general partner. Now, the difference between a general partner and a limited partner is the general partner is who is running the operation. This is the person that sources the deal, that puts the deal together, that manages that asset to make sure that it's operating at the best way it can, to oversee renovating the units, to oversee, it's overseeing the project so that it can produce income to pay the limited partners. So yeah, in a nutshell, that's what it is.
Yeah, no, that's awesome. And basically it's to sum that up, it's a way for people, who don't want to be finding these deals and dealing with the SEC and all this stuff, to just, they can bring on investors. The investors have limited risk. They're not signing for the loans. Their only risk is the capital that they have out on the streets, and they can share a lot of these returns, and they can benefit from the tax depreciation and all that stuff. That's a whole nother rabbit hole. But basically, Scott's, he's in multifamily and he's very familiar with it. So I wanted to definitely make sure we cover that, because that's really where the long-term wealth is. Because Scott, when you put your money in that deal, you're not having to, get leads and make offers. Like, that money's just going to make you a return. And then when the deal exits, your money just worked for you for probably 5 years or whatever. So, it's true passive income. So Scott, let's just, as we wrap the show up now, it's been great to have you on the show. What are like some success habits that you do? Because I'm a big believer. I'm actually reading a book for the 3rd time now called Atomic Habits, about, obviously habits. And so what are some things that you do, on a daily basis that really just keep you, on track to achieve whatever you want to achieve?
So this is super important to me. It's probably the most important thing. I have a routine that I have daily, and there's certain things I do on a daily basis that are just a non-negotiable. Number one, first and foremost, we're actually going to go not being awake, but is sleep. So sleep is the number one thing that most people overlook. You have to have a consistent sleep schedule, and you have to make sure that you get enough sleep. For me, that's 7 hours. That's not 7 hours and 30 minutes. That's not 6 hours, 30 minutes. That's not 8 hours. 7 hours is my high achieving number. That's the amount of sleep that I need. So every night I make sure that I get 7 hours of sleep. I wake up at 4:50 every single day. And the first thing that I do is meditate in the morning. That's a non-negotiable. It gets my mind right. It gets me set up for success for that day. And actually, I should take that back. The first thing I do is I make my bed. There's been studies, many studies shown that making your bed is the first way to start your day with a win. And it is the truest thing ever. It's crazy. It's something so small like that, but it makes a massive impact. So I make my bed, and then I go and I meditate for 10 to 30 minutes. And then I go to work out. So I work out at 6 a.m. every day. And I'm a CrossFit guy. So 6 to 7, I'm working out. And then I get back at 7, and then I'll read. So I get 20 minutes of reading in every single day. And that's a non-negotiable, because you do so many things when you read. You can listen to audiobooks, and I listen to those when I'm in the car. But actually physically reading teaches you several different things. How to focus, because you have to focus first thing in the morning on this, whatever it is that you're reading. How to comprehend, how to multitask. Because I think that reading, you have to focus on what's going on in the page. You have to comprehend it. And then if there's anything else going on around you, you have to make sure that you can focus on that, right? So that's really important. And that's kind of my routine.
I love it. I do a very similar variation of that, except I don't do the exercise first thing. Try to do it in the morning. And the meditation, my version of meditation, it's kind of weird. It's actually like running, because I should get more into the meditation. It's been like, oh, I should get to that. I've tried it. I've had trouble with it. Seems like you're pretty good at it. But I do the make your bed thing and the reading. It's like, for me, it's non-negotiable. Before we got on this podcast, I was actually reading a book, and it's amazing how powerful reading is. And people don't think because it's almost like you do it once, you're like, oh, it was good. But when you have 4, 5, 6 years of daily reading under your belt, like the amount of things that you can just, and then you see different things. And when you're taking action, you're like, oh my God, the book talked about this. It's so helpful. It's actually so helpful. I do a book review of the week now. I've been doing it for almost a year now, and I'm getting people to read more. So I had to start to, promote the whole reading game by putting out a video a week. And Scott, that's a very healthy routine. So with the whole sleeping thing, I have a question on that. You get up at 4:50 every morning. That's very impressive to do consistently. You're going to bed, I'm guessing, at like 9:50, 10:50. So seems like a pretty disciplined person. So I guess you're very good at saying no to things that kind of get you out late at night, because you value your health habits over, I guess, maybe having fun every night, because you're still a young guy like me. So we get tempted with these things.
I've been doing this for a long time. The mornings for me have always been, I'd rather, I like to stay up late too, but I'd rather be up in the morning, because when I'm up before the sun comes up and I'm active and moving around and being productive before the sun comes up, there's something about it that just really inspires and gets you going. Absolutely. I know that I'm going to win every day. And it's just what I like to do. I don't think age has anything to do with it. You could make choices, if you want to stay out late, I get it, but I value being a high achiever. That's me.
Yeah. I'm the same way, man. I don't even, it doesn't even certainly, within reason you can have fun, but I really honestly, like you, I value the discipline and the I guess the benefit I get from getting up and being structured. I like that more than going out and having fun till 3 a.m. I'd rather just get up like you and have you get that. It's almost like you just get that momentum in the day. And when stuff goes wrong, being an entrepreneur is messy. You have a good morning and you start off on the right foot. I don't check my phone in the morning either. You just have so much more energy to plow through the obstacles for the day. So we're very similar in that morning routine thing. So to end the show, Scott, before we get some contact information, there's a lot of people listening to the show now. It's growing every week. What do you think is the 1 or 2 things that separate, successful real estate investors, entrepreneurs, and then the ones who get motivated, they've listened to the podcast, they read the books, they reach out to people like us for advice, but for some reason they just don't get the success that they were looking for. So what do you think that kind of like that razor's edge difference is that really, you could share with my listeners that will help some people maybe in that position?
So, you had mentioned something about being structured, right? But I'll say this: you can never lose if you can never be beaten if you never give up, right? So everybody out there that goes out and you read a book, you listen to a podcast, you get excited, you go to a seminar, you get all pumped up, you leave, I'm going to go crush it. And then the next day it's like, I actually got to work for it. Shoot.
Yeah.
Dang it. Where's the magic pill that I can just take it and be successful? It just doesn't happen. Yeah. But if you work at it consistently, constantly, I mean, everybody's level of success is different, right? I mean, I don't think that success means monetarily anymore. I really don't. I think that comes as a byproduct of the rest of your life being successful. But
very true.
You just got to keep moving forward, keep making progress. Even when things come in the way, push past it, because guess what? The sun's going to come up again tomorrow. It's going to go down again tomorrow. But you know what? If you just keep pushing it, you'll figure it out. You might make some mistakes and that will help you to fail forward, but keep going.
Absolutely. It's so, that's such good advice, because I think people, a lot of times the answer is a lot more simpler than they think, and they think it's some complicated formula. It's like, be persistent, be aware, have good habits. And, over time, if you keep doing the right things, it'll turn out in your favor. It's really a numbers game, in real estate. So Scott, you've added a tremendous amount of value to my listeners today. And then to me personally, I've gotten some great tips from you just from this conversation. So I know you do have another podcast. You have your own podcast, Invest This. So if people were interested in finding more about you, connecting with you, let's share the podcast, how they can get a hold of that. And then if they want to get in touch with you, what's a good website or way for them to get in touch with you?
Absolutely. Yeah. Please go to investthispodcast.com. You're going to be able to find all the information on how to get in touch with me based on that podcast. You can opt in. Would love for you to subscribe and like my show. It's a ton of value that we try to provide each and every day. And, you can also go to find me on all the social medias: Facebook, LinkedIn, Twitter, you name it. Instagram. Instagram is the Scott Bauer. Other than that, just on Facebook, look for Scott Bauer. And HBSB Holdings is my company. So you can just look that up as well. You can go to hbsbholdings.com. That'll get you there. I think there's a link on the Invest This podcast website. If you just want to navigate through that, I'm all over the web. So look me up, and I would be more than happy to help anybody out there that wants to know more information on any part of real estate investment that we've talked about today, or anything else. Happy to help. Reach out to me.
Absolutely. I love it. You're such a giver, man. I'm glad we connected and became good friends.
Yeah,
and
man.
Thank you so much. I'm sure some people will be checking out your podcast. Thanks so much for coming on the show, and I'll talk to you soon, buddy.
All right, man. Appreciate it.